On January 7, 2009, Ramalinga Raju sat alone in his office in Hyderabad and wrote a letter. In that letter, he confessed to one of the biggest corporate frauds in Indian history. 7,800 crore rupees. Fake. The company he built, named after the Sanskrit word for truth, had been lying for a decade. In 1987, he and his brother, Rama Raju, founded a small software company. They named it after their father, Satyanarayan, shortened to Satyam, which means truth in Sanskrit. They started with just 20 employees, no venture capital, no Fortune 500 clients, just a family name and a vision. The breakthrough came in 1991. Satyam convinced John Deere, the American equipment giant, to become its first outsourcing client. In 1991, Satyam listed on the BSE IPO, oversubscribed 17 times. By 2001, listed on the New York Stock Exchange. By 2006, revenues crossed $1 billion. The company that started with 20 employees was now serving 185 Fortune 500 companies across 55 countries. Ramalinga Raju was on every business magazine, a founding father of Indian IT, a man named after truth. But behind the growth, a very different story was unfolding. In the early 2000s, Raju's greed shifted to real estate. He opened 365 shell companies. He bought land across Hyderabad using fake Satyam profits, fake bank statements, 7,561 fake invoices for customers who didn't exist, for work that was never done. 13,000 ghost employees drawing fake salaries every month. The gap between the real Satyam and the reported Satyam grew wider every year. Then, the real estate market collapsed. Raju needed a new plan. In December 2008, he announced Satyam would acquire two companies, Metas Infrastructure and Metas Properties, for $1.6 billion, both owned by Raju's own family. And here is the detail that tells you everything. Metas is Satyam, spelled backwards. His son's company had already won the 12,132 crore rupees Hyderabad Metro Rail project. The plan: use Satyam's fake cash to buy his own family's companies. The fake money would become real assets. The gap would disappear. But shareholders revolted. Satyam's stock crashed 55% the moment the announcement was made. Raju cancelled the deal within 12 hours. Then, a whistleblower email reached the Satyam board. 3 independent directors resigned. The World Bank barred Satyam for 8 years. Raju was cornered. On the night of January 6, 2009, he sat alone in his office, and he wrote a letter. The letter was sent January 7, 2009. In it, Raju confessed everything. The cash balance shown in the books, 5,040 crore rupees. The real balance, nearly zero. 13,000 ghost employees, 7,561 fake invoices, total fraud, 7,800 crore rupees. And then he wrote the line that would define his legacy. It was like riding a tiger, not knowing how to get off without being eaten. Satyam's stock crashed nearly 80%. Raju was arrested 2 days later. PricewaterhouseCoopers, Satyam's auditors for 9 years, had certified entirely fabricated accounts. They saw 7,561 fake invoices and raised no alarm. In 2018, Pricewaterhouse was banned from auditing Indian-listed companies for 2 years. Tech Mahindra acquired Satyam at 58 rupees per share, renamed Mahindra Satyam. 52,000 employees kept their jobs. In June 2013, merged completely with Tech Mahindra. The name Satyam disappeared forever. In April 2015, Ramalinga Raju was convicted, 7 years in jail, fined 5.5 crore rupees. The man who named his company Truth served time for the lies that destroyed it. So what does this tell us as investors? 3 things. First, auditors are not a guarantee. PwC missed a 7,800 crore fraud for 9 years. Always look deeper than an audit report. Second, promoter share pledging is a red flag. Raju pledged Satyam shares as personal collateral. When promoters pledge their shares, always ask why. Third, extraordinary growth deserves scrutiny. When results are consistently better than industry peers, ask how. This is not financial advice. Always do your own research before investing. But the Satyam story is the single most important lesson in Indian corporate governance history. A company named Truth, destroyed by lies. Subscribe to the Stock File. Every week, we open the file on another stock, from IPO to today. Next up, HDFC Bank, India's most trusted bank, the most boring stock, and the most rewarding. That story, next week.